So this is my Adidas stock analysis on whether you should buy it or dump it by Sean Beatty. Adidas was founded in 1949 in Germany and today is one of the largest global sportswear brands. It competes directly with Nike, Puma, Under Armour in markets like athletic footwear, apparel, and lifestyle fashion. They operate in more than 190 countries, which gives them significant global diversification and key concept in financial management. What makes Adidas unique is how strong they are tied with the soccer culture. The sport alone drives a huge portion of their brand value. Understanding this context is important when analyzing the company's financial performance because brand identity influences their sales, pricing power, and long-term demand. Is the company good or bad? When you evaluate whether Adidas is good or bad company, you have to look beyond the brand and also their fundamentals. First, Adidas has extremely strong brand recognition and historically high profitability, which is a positive indicator for long-term value creation. Their partnership with Messi, for example, is a top and other top soccer clubs and global influencers give them sustained marketing exposure, something that is especially important for maintaining revenue streams. However, in financial management, we also look for consistency of performance. Adidas has struggled recently with brand momentum, especially after ending their partnership with Yeezy, which was responsible for billions in revenue. So Adidas is fundamentally a good company, but one that has gone through major instability when getting top athletes for other sports than just soccer. Slide forward financial overview. Looking at Adidas financials, their annual revenue typically sits between 21 and 23 billion dollars, sorry. Recently, they experienced a significant decline due to loss of Yeezy sales, which was a whole altercation of him, Adidas and Kanye because of what was going on with him. From a financial management standpoint, this shows how over-reliance on a single product line or partnership increases concentration risk. The positive news, though, is that Adidas' gross margin has begun recovering and their profitability is improving moving into 2024 and 2025. That's important because margin recovery shows better cost control, stronger inventory management, and improved operational efficiency. Additionally, the stock price has rebounded from very low, which reflects grower investor confidence, but stock price movement alone does not guarantee strong fundamentals, so we still need to evaluate the risk. So, some concerns. There are several key financial concerns investors must consider. Again, what we already talked about with the whole Yeezy sales collapse. Along with that, Adidas has major inventory issues in 2023 and 2023, which led to high carrying costs and reduced cash flow. Excess inventory is dangerous because it ties up capital and reduces financial flexibility. Next, Adidas continues to hold lower market share with Nike, especially in North America. A company with declining market position usually faces slower future cash flow growth, reducing shareholder value. Lastly, profit levels are still below Adidas's historical peak years, meaning the company has not fully recovered its long-term earning power yet. Okay, quick slide about interesting things about Adidas. First, again, their dominance in global soccer sets them apart. One thing I didn't know, some of my teammates actually called it Adidas, and major club deals keep them currently relevant worldwide. Third, the lifestyle crossover products, especially the Samba, which is type of shoe, and Gazelle and campus shoes, have created a massive trend globally. These retro silhouettes have driven millions of additional sales in the last 2 years, helping rebuild brand momentum. And finally, Adidas is a leader in sustainability using recycled ocean plastics. I actually bought a pair of shoe that they did that for in their product lines. This appeals strongly to younger customers, which support long-term brand equity. All this helps strengthen demand and support future cash flow. Adidas stock performance has shown a strong recovery across 24 and 2025 after hitting multi-year lows. Analysis currently rate Adidas has a hold or moderate buy. In financial management terms, this means analytics see upside potential but also recognize significant risk. The volatility in the stock is tied closely to global sales trends and how consumers respond to new product cycles, unlike a stable dividend stock. Adidas price is sensitive to fashion trends, marketing SaaS. And then currently, before I started this, the stock was around 203, $204. All right, so why I would dump it. For my final evaluation, I would personally dump Adidas rather than buy it, even though the brand is covering the financial risk outweigh the potential upside for me as an investor. First, from a financial management perspective, Adidas still carries high risk. A lot of their recent sale momentum is built on trends, like the Sambas I spoke about. Trend cycles are also unpredictable, and depending on them, creates unstable revenue projections and inconsistent cash flows. Second, Adidas's profitability is still well below previous peak levels, which means the company has not demonstrated strong earning recovery. Investors look for companies that constantly generate high revenue on equity and strong net profit margins, and Adidas has not been able to do that yet. Third, again, the Yeezy partnership revealed major concentration risk of how the company never should have to rely on a single product. Adidas also continues to trail far behind Nike in the North America market. I would say Adidas is a bit below Nike when it comes to popularity, and at this time, I feel like they're falling down in the North American region. Finally, although the stock has rebounded, much of that appears to be a short-term sentiment bounce rather than the true fundamental strength. I don't see enough evidence to support that Adidas has sustained a long-term kind of a competitive advantage. So ultimately, from a financial management standpoint, I would dump the stock because the combination of slow earning recovery, regional underperformance, trend trend dependency, and competitive pressure makes Adidas too risky for me. And here are my sources.